Today everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 6th of May 2023, and it's the weekly technical analysis for spot gold and dollar yen for the second week of May. And looking across these two majors, spot gold has made an all-time high at 2080, just above 2080, spiked through the previous all-time high at 2075, and then quickly pull back and retrace all the way back to the 2000 level for support. So very drastic move here. That was right after the Federal Reserve announced their rate hike, and as a safe haven trade, the traders move into spot gold and push all the way up the following day, at the start of the following day. And likewise for the dollar yen as an inverse correlationship, it dropped from the resistance level and dropped all the way back down into support to finally find some support on the Friday after the non-farm payroll data. All right, so we'll look into more details later on, but let's take a look back at the last week's news and impact from there that triggered all these significant moves, and look forward to next week with the inflation, US inflation figures. Well, looking back at last week, it was a tale of central banks rate decisions, with the RBA, Federal Reserve, and the ECB all raising rates by quarter percent, 25 basis points, with the RBA making a surprise increase where they were not expected to. They did make the pause for the last couple of months, but they finally now made their 10th rate hike since May of last year, as well as the Federal Reserve, also a 10th rate hike since March of last year, while the ECB made their 7th rate hike since July of last year. And the market was expecting the Federal Reserve to hint at a possible pause, but it was not stated, and the Fed Chair Powell did highlight that they will need to take a look at the data month by month and will evaluate that for the next meeting in mid-June. So next key data will be US CPI, plus there's going to be another month of NFP data at the beginning of June, which on Friday, which data was stronger than expected, strong 253,000 jobs added. And more worrying is also the average hourly earnings increased by 0.5% versus an expected 0.3% increase. So this is indicating a very hot jobs market, and this will be a concern for the Fed that could drive inflation higher again, which we'll see next week, next Wednesday, where these are the forecast numbers, and they're hoping that it dips below 5% for the year. So this will be a very critical one on Wednesday. And on Thursday, the Bank of England's turn to raise interest rates. They're expected to also increase by 25 basis points. And following that, the GDP figure on the Friday, where it's still going to be a zero growth, hoping it doesn't dip into the negative territory. So after some significant rate decisions from the central banks, next week we're going to focus back onto inflation from the US and follow up with a couple of UK news for next week, with especially the Bank of England rate decisions. All right, let's move back to major pairs analysis. Okay, so let's begin with spot gold. And after a breakout on the Tuesday already, above this upper trend line of the triangle, and followed through on the Wednesday after the Federal Reserve announcement, and right away it gapped up within the at the start of the open of the market on the Thursday, with a spike through within 5 minutes to set a new all-time high. And just within 5 minutes, it just pulled back as well, and then followed through on the Friday to retrace that breakout from that trend line, from the upper trend line, right at the 2000 round figure. So very volatile moves after the breakout, and then a return back, and that already for the week. We look at the week's range was over 1,000 pips for the week, and it's closed as a spinning top with a long upper wick. So we'll see perhaps a return back to test the previous swing high, which could then form a potential, maybe a bit early to tell, but a potential head and shoulders pattern here, with the neckline at the 1975. So we'll see if that's going to happen and whether the pattern will form. So it's still early to tell. We'll see what happens next week, and especially with the US CPI data coming up on Wednesday. So we got to watch out for this pattern here. If it doesn't break above the 2050 round figure and fails, then it's got to watch out for the breakdown from the 2000 and then the 1975, which could trigger an avalanche here with a strong retracement back down. But early days, we'll see what happens. And if we just take a quick look at the previous high here that was formed 2020, that was the 2075. And it did come close last year. But after that spike from last year, it did retrace strongly back down, so that's a concern. But we'll see whether any bearish reversal pattern will form from here, especially with inflation running still a bit high for the US, and markets are still concerned about the potential soft recession towards the end of the year. So this time the spot gold precious metal could remain bullish for an extended period. So big support zone from the 1975 and the 1950 area for support. So let's move this over here. There's a support area here from the 50-fib retracement. I won't change the, let's see, we move this up to this swing high. It's possible that we could have the interim support at the 38-fib and then the 50-fib up coming up to the 1950 level. It's still possible. We could also move this. So major resistance now at the all-time high. And let's also perhaps mark a intermediate resistance at the 2050 with potential right shoulder. Okay. Key pair to watch out for next week. All right. So let's compare this and take a look at the US dollar index. It's probably not as volatile as spot gold here. But let's compare that. Here's the US dollar index, the DXY. And it has tested both the upper trend line and the lower trend line for the week. It started off strong for the week with a slight gap up and attempted to test the 102 round figure, but then closed below this previous swing high here. And then fell through the FOMC rate decision and fell back, but found support, still found support at this lower trend line and attempted to recover, but still a weak close on Friday after the NFP, just below the 101 round figure. So trend line is still providing support, but it's still looking a bit bearish. On a weekly time frame, it's a weekly close with a spinning top, but still hanging on just above the lower trend line here. And the interim resistance just above 102 at the 38-fib is still strong, still a significant distance away. But we'll see if next week's trigger will either boost the US dollar or make it even weaker. Okay, so after the FOMC meeting, now the focus will move back to inflation. And we'll see whether this support is going to hold. If not, there could be a test of the swing low at 136. But at the moment, it's having difficulty to climb up towards the 102 round figure area, where the daily 55 is dropping in as well, dropping down lower. Okay, so still consolidating but with a key support level which needs to hold, and it needs to hold next week. Otherwise, it's going to turn bearish for another week or another 2 weeks if the support breaks. All right, let's move back to the other major pairs. Let's move on to the dollar against Japanese yen, where it did attempt to push up very quickly to test the resistance at the previous swing high and close to the 138 round figure. Didn't manage to hit the fib exactly, but it was blocked by the zone here. And that was right from the start of the week. And after that, after a dark cloud cover, bearish candle, the Wednesday's FOMC decision triggered this weakness in the US dollar all the way back down into support at the 50 fib, and the daily 255 are in confluence there as well, managed to provide support where it climbed back up to attempt to climb above the 135, but this close slightly below that. So let's move this out of the way. Resistance is still strong at the 138. And of course the swing high. And this Wednesday CPI is going to be a key trigger for the dollar yen as well. And because of the safe haven trade, the Japanese yen was bought up after last week's weakness. So it managed to recover and all the way back to where it started from, where it broke out from this bearish channel. So now we'll see this week how far it's able to recover, or whether it's just going to consolidate around the 135. But there's a critical support level just under the 134. Okay. Let's also take a quick look on the weekly time frame, where it still closed as a bearish spinning top here. So not able to break through the previous swing high and climb up higher. So it could be further consolidation, and it's critical that this pair finds support at the 50 fib, as well as this rising trend line that's also providing support. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.